Hello, my name is Steve Bigelow with the Candlestick Frum. It is very easy to read the candlestick charts when you know what patterns are likely to occur based upon the setups. For example, the other day, or last Friday, we had bullish trading. This was not a candlestick reversal signal. However, there was the prospect that it was supporting off the bottom of this wedge formation. Now, is that important? It is in the sense that this may not have been a reversal signal, anticipating we're going to probably head up back to the top of the channel. But when you applied a JHook plus pattern, and a JHook plus pattern is nothing more than a JHook pattern, but at a level that everybody can visualize, like a major moving average of the 50-day moving average. That pattern tells us wave 1 and wave 3 are going to be likely the same, which means at least we have the prospect of heading up to the first target of the 200-day moving average. That also allows you to make decisions of which positions you want to be in, obviously predominantly long during this market move. Another JHook pattern is the bobble breakout. That's where they come up to a resistance level, fail, and then you can see the morning star signal right here on the 50, the 34, and the T line, and closed right there on the 200. Now that's important because everybody's watching to see whether they're going to get through the resistance level that they couldn't get through before. The positive trading today said you could be buying immediately because the probabilities now are that we're in wave 3, the same magnitude as wave 1. The reason the JHook plus and the bobble breakout are much more compelling is because they're doing it at levels everybody else is watching. So that also makes for identifying the patterns that look exactly like the market indexes. This is your classic pattern, your fry pan bottom. And again, all the aspects of what human nature normally does is when they come up through a resistance level, they'll come back and test it. We can see immediately what they were doing at that level. Doji was indecision. Bullish trading on Friday told us we had a JHook plus in progress, which meant as soon as things opened positive, we could be buying immediately, knowing that wave 1, wave 2, wave 3 was going to be the same magnitude as wave 1. So there was lots of patterns. And this is where, using that information we know built into a bobble breakout, that if they started trading this positive, what would that imply? That would pretty much imply that the 200-day moving average was not going to act as resistance anymore. So this allows for excellent option entries right at the appropriate time, or if you're a day trader, you get in right at the appropriate time. So all the candlestick charts reveal is high probability trade setups that are produced by human nature, which the Japanese race traders have identified for us over the last 400 years. So anytime we see a pattern setup, like your classic pattern, a fry pan bottom with the expected strong price move and a pullback, and this is where the T line is a highly effective trend indicator. Notice when they pulled back, it closed right on the T line. That told us as candlestick investors, they weren't taking it down. And what's our Doji Rule tell us? If they start trading positive the next day, they're going to trade it positive because of the Doji Rule. And then if it opens positive after that, there's our classic pattern confirming. Anytime we can see that JHook pattern, especially setting up off the T line, it dramatically improves the probabilities of being in the right trade at the right time. So this is what we kind of illustrate every day on the Candlestick Frum chat rooms or our Monday night or Thursday night sessions. we're identifying not what the fundamentals are of a company, but what the perceived fundamentals are. And that's going to be illustrated in candlestick charts. So right now, we've got to assume we got at least a couple more days to the upside with a high probability prospect of coming up here to test the 200. That'll be it. We'll see you in the chat rooms.